Hello and welcome. In this video tutorial, I want to go through with you a simple price action or naked trading way of looking at the market in terms of how you could look to take advantage of the current trend in the market. Right now, looking at the daily chart, we are bullish, okay, on the dollar Swiss. Now, as traders, as the saying goes, the trend is your friend up until the end. So it is clearly evident from us that we are in a bullish rotation. And how can we see that? Just looking at this, okay, while my chart is loading, right? What we do have, we have price action doing this. So initial structure low, then mark price action created an outside return. Then we created new structure highs, meaning we cleared or we broke and closed above previous structure resistance to create new structure highs. So what happens is I am put in a bullish alert. So I'm thinking buy. So moving on to the hourly charts, how can we get involved in this trade setup, right? So as trend continuation traders, this is how you can get involved, okay, in this setup, right? So since we broke and closed above, okay, this previous structure resistance, okay, which was resistance again right there, so we created new structure highs. If I was to draw a harmonic move, right, from here, from swing low to swing high, and I were to clone this here, just wanted to show you an ABCD harmonic move. If we could get one, right? Okay, yeah, so we got something of this nature. So we had an ABCD pattern coming into the zone. But if you are an ABCD pattern trader, there are some people who would take this ABCD pattern as it is, but as a counter trend trader, as well as a trend continuation type trader myself, there isn't much of a structure zone for resistance. So as the market broke above and closed above that previous structure, it gave me the alert that price action is moving onto the upside. So as I am a counter trend trader, I saw this ABCD pattern, but there was not much justification for me to take this particular trade as an ABCD pattern as in itself, because there isn't structure up here for me to protect my stops. Okay, so as a trend continuation trader, you are looking to hop onto the current trend or the current momentum. So how we do that? So as price action retested to this previous structure, we had what was called a pin bar. Even though I missed this trade setup, I couldn't get involved. So we had it could be, call it a doji. So we had it right there. So this here is highlighted. So right, so we had that there with this bar. Okay, so right there, that bar was a pin bar, or some people call it a doji, which gives us an indication that price action once is rotating, okay, because we had this pullback. And if I were to take my RSI and just take a look, okay, yeah, so we had the price action creating this it's a pattern or chart pattern or pattern formation, I might say, to the upside. So if you are a pin bar trader, you could have got involved, okay, on that setup. And how you could potentially still get involved in this setup is, right, so with that ABCD pattern coming into play, So you could look to have price action testing this zone again. So this is how you could have taken hold of the current momentum of the market. So if you are a trend continuation trader, you are looking for price action to continue into the high side. So if I was to say swing high to swing low, so if I was to just clone this arrow again, right? So we had that retest there. So I would look to have profits taken out, okay, at that zone, right? So if you got involved in this pin bar, right? So you would be looking at risk of an entry at the close, right? So it would be something of this nature. You could have stops. You can use an ATR for stops, or you could use Fibonacci for stops as well. But taking a hypothetical example that you did take this trade, even though I have missed it, right? So you are looking at risking that much in order to gain right up onto that 127 if you are a true trend continuation trader. So looking at risk to reward, it is a trade which I would say is one that is profitable. So let's take it from entry, from swing low. So if you had price entered in there and we're coming up onto coming into our 127. So let's see if we do even have a 127. Okay, so low, let's see, Fibonacci extension. If I were to say swing low to swing high, bring that down, right? We get the 127, we get a 1414. Oops, yeah. So we have that potential 1414 up there. All right. So if I were to take an inversion again, okay, of this trade from swing low to swing high, bring that down again. We have a 1.618 there as well. So we have some confluence there when it comes to profits. So we have an inversion going on there as well. And if I were to take my Fibonacci retracement from swing low to swing high, but anyway, yeah, so pretty much you get the idea. So this would have been a trade setup that one could have potentially gotten involved on, but yeah, so as traders, this is one simple trade that you could get involved on, just looking at the charts without adding any fancy indicators of that sort. So you have your entry, which would be the pin bar. You have stops below previous structure, so just looking at that pin bar in itself, or you could have stops below, okay, our structure zone right here, which again you still have a positive good risk to reward on this, which will be greater than 1:1 if you had stops below this previous structure and you are looking to take the trade for that 127 Fibonacci extension for targets, which I would say is a good trade, a simple trade, where you have the potential of gaining right. Tools aren't really giving me problems. Okay, so yeah, so pretty much, yeah, so you're looking at a greater than 1:1 risk reward, okay, on this trade setup. Okay, so yeah, so I just wanted to showcase to you that simple trade setup that you could have gotten involved with today, and it is an educational video for myself, just to showcase to you how trading can be simple as long as you follow your trading plan. So without further ado, plan your trade your plan, and cheers.